I'd like to thank everybody for joining me today. Today, I want to talk about life insurance and how powerful life insurance can be for our planning and helping our clients. The one thing to understand with life insurance is it's ever evolving. And if you start looking at life insurance, we've got term, we've got whole life, we've got universal life, variable index, and we have all of these new riders that are coming, long-term care, critical care, no lapse guarantees. All of these things are designed to help our clients utilize how the life insurance can help them during their life and help them at death to take care of those things that are important to them. So when you start looking at life insurance, it's more than just a death benefit. And if you think about this, what don't most people know about life insurance is that it goes beyond the death benefit, that there's something more there that they can be using if they understand it and if it's something that they need. But it's if you think about it, it's going to take them from now through lifetime and through and into death to take care of all of those needs for them and their loved ones. If you start looking at life insurance and what are the features and benefits, we typically all know that there's an income tax-free death benefit. Now, that income tax-free death benefit, if not properly done, can turn into a taxable benefit for income tax purposes. We can have income tax-free growth inside on the cash value growth. With that cash value, we can also, if it's designed right, we can access that cash value income tax-free. So during life, let it grow tax-free if there's cash value in the policy. And then when you need it, you can access it tax-free for whatever you need. What I like about the cash value is you can access it at any age without a penalty. We know with retirement accounts, we can't access it without a 10% penalty plus the tax prior to age 59 and a half. And if you don't ever need it, you've got to access that money in the require and with required minimum distributions. Life insurance allows us to access that at any age without a penalty. And when we're building the policy, there's no limits on the contribution amounts. As long as the insurance company looks at it and says you have the financial wherewithal to qualify, you can put as much money into the policy as you would like. And finally, with the riders, we can accelerate the death benefit. And that's the key. With a lot of these riders, we're accelerating the death benefit. So the acceleration of that death benefit is income tax free. So if we have a long-term care need and we have chronic illness riders or long-term care riders on the policy, we accelerate that death benefit and access the policy benefit tax free. Now, when you start looking at designing a life insurance policy, we want to make sure that we're designing it to meet the needs of our client. Now, most people think, okay, I want a maximum death benefit for the smallest amount of cost. Well, if you think about term insurance, that's pure maximized death benefit. We're getting a big death benefit. We have very little cost because mortality cost is going to be low while our clients are young. However, as they get older and that mortality cost increases, the cost of that term policy is going to increase as well. So if we get to a permanent policy, we can actually spread that mortality cost across their lifetime and maybe get a better bang for the buck there. But if you think about maximum death benefit, minimum cost, we're driving that mortality cost as low as we can for the amount of death benefit we're going to get. We're not putting extra cash value or extra bells and whistles into this policy because the goal is death benefit. Now, the reverse is if we want to maximize our cash value. Well, the largest cost of any policy is the mortality cost. So we want to drive the death benefit as low as we can without creating a modified endowment contract. So get it as close as we can to that line so we drive our mortality costs down. Then if we want to maximize our cash growth, do an increasing death benefit policy. So as we add premium, that death benefit grows just a little bit more every time we put premium in to account for that premium and stay within the IRS limits. So if we understand from our client what's the primary goal, cash value, or max death benefit, and design the policy. Sometimes if we have competing goals, maybe we need two policies. So let's do what our clients need and help them understand why it's being designed that way. If you start looking at the design of a policy, it's always going to start with our client's goals. And then when we get into the design, I always want to know how much premium can our clients put into this policy? Whether it's a cash value policy, whether it's a death benefit policy, I want to make sure that we've got the right premium structure. Now, if you think about premium, we can do a single premium policy. Now, if our client asks, hey, I want the least amount of cost into this policy. And if you think about it, the sooner the insurance company gets the money, the cheaper that policy is going to be. And so if we do a single premium, that's going to give us the lowest overall cost for that death benefit. So we can have a single premium policy, or we can pay for life or anything in between, whatever our clients really need it to be. Once we start doing, building this policy, the next thing's going to be, do we want to have cash value in this policy? If we want cash value in this policy, that's going to lead us to a whole life policy, an indexed universal life policy, a variable life policy. Typically, definitely not going to be a traditional term policy, and probably not a guaranteed universal life policy. But we're going to want something that is designed to increase the cash value. Now, the question is this the primary goal of the policy, or is this a secondary goal of the policy? And we just need to know that so that as we build in the cash value growth, we know are we focused here, or are we going to be focused on the death benefit? If I look at this and it's a policy that we're looking at putting in $25,000 a year, this is designed to build cash value. And the death benefit is, if you see this, is starting out at a lower value and it's growing in every year. So we have an increasing death benefit policy here, which will allow us to maximize the cash growth. Now, if I want more death benefit, less cash surrender value, I can do that. I can play with that design to get whatever we're looking for here. Now, if you think about this, we get leverage off that death benefit. That's the goal of life insurance, is to create leverage. So I can create leverage in the death benefit. I can create leverage in the cash surrender value and create an efficient tax-free what if policy, a tax-free retirement policy. Whatever the client wants to do with that cash is up to them. Just remember, cash grows tax deferred. It can be accessed tax-free, and we can access it as either a withdrawal or as a loan. If we access that money as a withdrawal, we can never put the money back in. If we access it as a loan, think about that as a personal line of credit. I can take money out. When I want to, I can put it back in. And if you don't ever put it back in, it's going to be paid back from the death benefit. So the goal is to understand, is our client looking at surrender value, or is our client looking at death benefit as the primary goals of this policy? And once we understand that, then we can build this policy to meet our clients' needs today, review it every year going into the future to see if those goals change and we need to do something different. But as you look at life insurance, the design of the policy is crucial. When we look at somebody's policy, I can tell you what the policy was designed for. But unless I talk to the client, I can't understand if this policy is meeting their needs, because I have to understand their goals. If we're working with this client from the start going forward, let's understand their goals. Let's understand what they're trying to accomplish. And let's design this policy to meet those goals and objectives. Just remember, we could have competing goals, which may mean let's do 2 policies or 3 policies, whatever it is, to make sure we hit all of those goals with the right design. So I appreciate everybody getting on today. If you have questions, feel free to reach out. And if not, we'll talk again next week. Thank you.